take all my real estate out, my business deals, take everything out of the world, take all my net worth, everything. If I died today and everything else went away and my partner stole everything from me, one thing I know I can rely on is my wife getting a check from the insurance company. It's the sleep safe at night, have no stress, no pressure, no anxiety type of insurance policy that I think a lot of people just don't realize. You just need a couple $100 to get started. When somebody says they're overwhelmed, I go, no, you're inefficient. You're not overwhelmed, you're inefficient. You're not killing 5 birds with one stone. You're traveling too much to your office, your studio, or whatever. Like, consolidate, man. Make it all in one house. So I look at Dave Ramsey, he's actually the opposite of dumbass. He is so hyper intelligent and he knows his audience so well, Devin, that he knows how to sell them fear because they're in the phase of their beginning journey of financial independence. The guy did $300 million in info product sales last year. Your money sitting in a savings account or a checking account is basically a homing beacon to the world and the universe. Hey, come and steal me. Come create some bill for Pace or Devin to pay for. And so for those of you guys who are like, I don't really have that money. Yeah, you do. Look at your finances and find out where you're wasting $300 a month, or look at your emergency stuff that you had to pay for, or the football party you paid for, or your daughter's birthday who's 6 years old and you spent $1,000 on her birthday. You don't need a lot of the things you have. Go and take care of your family first and foremost by putting in $300, $400, $500 a month into a policy like this and guarantee that you are worth more dead than you are alive.
That's why infinite banking is so good. You can actually recapture all of the interest you're paying to everybody, so not take any more risk, not go invest, and just control who's getting all your interest. So instead of giving money to everyone else, you're keeping it. So you have more money inevitably. Yeah. Then you can take it and you can be a little risky because you're not using all of it to go invest.
This is the Mr. Burr Show.
Welcome back to the show, everybody. Today is going to be a treat for you guys. I have a man on that does not need any kind of introduction, but I'm going to try to give him one. This man has created probably one of the biggest, best communities in the shortest amount of time I've ever seen. I knew him when he was doing like 5 deals a month, maybe more, 5 to 10, in Phoenix, like 2019, before he became like Mr. Sub 2. It's incredible how he did it. We're going to dive into how he built this community, how he buys real estate with creative financing, how he takes over mortgages with 3% interest rates, 2.5% sometimes. We're going to dive into all that. You guys are going to get a ton of value. And when you do, make sure to share the episode, because if you share it, we all learn together, we all grow together. So without further ado, Pace Morby, welcome to the show, brother.
What's up, man? Thank you for having me. I appreciate it. I think we were going back and forth on the show, and I was like, yeah, I'll be in Arizona at this time. You're like, bro, it's virtual. I'm like, come on, man, let's hang out. I want to go in the studio. And then this morning for some reason, I just thought, because we've hung out so much, I thought I was going to your house or going to your studio. I looked on my calendar. I was like, oh, it's a Riverside? Dang it. I won't be able to give the man a hug. But thank you for having me on the show today. I really appreciate it.
Of course, man. It's always a pleasure. I remember the first time I met you was 2019, end of 2019, and you were doing some meetups at the Batch office.
Yeah.
Our good friends, Jesse, Evo, and Annie. And dude, just the value that you'd give back there for free. You would just give away your best stuff for free. It was incredible. So it's always good connecting with you. We're both busy, so connecting is tough.
Yeah.
And I wish we could connect in person, man, but ever since we had the baby, I stopped doing the studio, and I just do it in my house so I can stay home with the baby.
Smart, man. Get rid of the travel, be more efficient. You know, I told somebody the other day, when somebody says they're overwhelmed, I go, no, you're inefficient. You're not overwhelmed, you're inefficient. You're not killing 5 birds with one stone. You're traveling too much to your office, your studio, or whatever. Like, consolidate, man. Make it all in one house. So same thing with me. Like, I've got 2 big offices, one with Cody Barton, you know, that partner, and then another one with Josiah. We've got a collective 600 employees between all of our companies. And I go into the offices maybe once a month. And when I cut out 30-minute drive here and 20-minute drive there, and that adds up over the month, I get an extra probably 10, 15 hours a month just to be at home, either work out, be with my wife, or just be with my kids, jump in the pool, etc. So I changed the diaper right before I got on the show today, which is great. So for those of you guys out there that are like, how do you guys do it all? How do you balance it all? Well, we trim out the fat, right? We trim out all the travel time and the windshield time, and we go, hey, I'm not going to go down to the studio, even if it's 15 minutes down the road. I'm going to build a studio in my house, make it efficient. I can, kill all the birds with one stone. So back to the batch thing, which is interesting. That was during a time where I was renting an office from those guys, and I felt as if I needed to be in a physical office. Cody and I were both primarily working out of our home, so him and I would have company meetings literally at Starbucks. And now we own the building behind Starbucks, it's like a 20,000 square foot building. But at the time, we would meet at Starbucks once a week, and then we'd work, on our own accord at his office, his house, my house. And I was primarily out in the field back in 2018 when him and I partnered together. I would be on the field going on appointments, and then we were building an in-person acquisition team. And in 2019, or like right at the end of 2018, I told Cody, I was like, we need a nicer office. Like, I need a place where I can shoot content. I need a place I can do these things. I can hold meetups. So I was renting an office from Jesse, Evo, and Annie, who are the owners of Batch Leads. For those of you guys who don't know Batch Leads is one of the biggest software companies in the real estate game. And I met them in a mastermind called the Go-Giver Mastermind back in 2017. And I look back at this mastermind, and it was with Brandon Simmons, gangster guy here in Arizona. And it was just a bunch of guys doing deals and gals. And it was really cool to watch how those people that came out of that mastermind went off to build some of the coolest companies. Jesse, Annie, and Evo met in that mastermind and then went and built a, $50 million company from being in that mastermind called the Go-Giver. And I ended up doing meetups over that office because I felt like the office that I was doing meetups at, that Cody and I had, that office was on Alma School and freaking, Adobe or something.
I remember that office.
And it was sandwiched between a tattoo parlor and a hand job spot. Like literally you could get a tattoo and then go over and get a happy ending. And we were in the middle as a real estate office, and our office smelled like weed all the time. And we would have these big meetups, but there was like no space for anybody. So we go out in the hallways, all right, fill the hallway. And then it would just bludgeon out into the parking lot. And this thing got so big. It got so big that I was like, I need a bigger space. So I started renting that space. And that's where I started my YouTube channel. We just hit 320,000 subscribers, I think this morning. And that all started from that teeny little office and just doing free meetups, It's amazing what you get when you just give it all away.
Right. Because people can sense that. They can sense that you have a heart to serve and you're not just trying to get something from them. And when you put out content, you're just serving.
Yeah.
People just end up following you and they listen to your advice, and then you can eventually monetize it. But at first you have to get the people following. You have to get attention. And the way you do that is just to serve. Right.
Yeah. And one thing I would advise to people. So when everybody listen to the podcast, I'm known as the guy, I have $500 million in real estate. I've never used my credit. I've never had to show a W-2, a 1099. I've never had to use any of my own money to acquire the real estate. My cash flow is heavy. My take home is probably about $300,000 a month just on my portfolio. And I never have to work ever again, which is crazy. But what's funny is more people, I'd say 2018, people knew me as a guy who was doing creative finance. 2019, I really started branding myself. 2020, I launched the real estate industry's only community. A lot of people will call themselves a community, but like a community is something where you have a diverse set of people, where it's not just people learning how to cold call or not just people learning how to do the Burr strategy or land develop. It's a diverse group of people that can all leverage resources, where once you join that community, you never have to go outside of that community to get a resource that you need. And also, more importantly, once you're in it, you're always in it, right? Rather than like, hey, it's a monthly fee. So like, I'm friends with Alex Ramosi, and I tease him about this. About 3 years ago, he sends me a text. He goes, you figured out community. And then he went and bought school, and he started coming up with like school communities. I'm like, bro, those are monthly mentorships. And I'm cool with, like, you can call them a community, but a community is something that you join, you're part of, and you have to help be a leader inside of, rather than just be a participant. That's not a community. It's a group of people. And where this obsession came from is that when I would do these meetups, and now what people want me to speak about is not how I acquired all this real estate. People are now asking me like, will you speak about how you built a community? I'm like, yeah, I'll tell you exactly how I did it. I have an obsession that I have a hard time when somebody asks me a question. I cannot stand answering the question in a 3-minute time frame and giving a blank answer. I go, who's asking the question? What phase of their business are they in? What sex are they? What part of the country are they in? What current mindset phase are they in? And do they have a budget? because those things are going to change literally everything that I tell that next person, right? So my meetups were primarily, I do like a 30-minute speech, and then I'd stand out in the parking lot and I would talk to the individual and I'd look at them in the eye and I go, who are you? Where are you from? All the things. What's your socioeconomic background? What's your current mindset situation? What support systems do you have in your family? Okay, let me, aggregate all your resources and who you are, and then I give you a detailed plan. And after doing this for a couple of years, it just got out. The word spread that Pace gives incredibly detailed advice to an individual rather than blanket advice. And I started then coming up with avatars. I would be like, oh, you're this avatar. Like now I've found 26 different like avatars and umbrellas underneath those that people cascade underneath. So for example, I'm in Miami the other day. I'm speaking, Patrick Bet-David, Rick Ross, a lot of cool people. And I'm out in the hallway talking to people. Everybody else is out in the green room. I'm in the hallway talking.
Is this Clever Summit?
This is Clever, yeah. And I'm getting texts from Patrick Bet-David. Hey, are you going to be in the background or back thing? And Rick Ross is like, hey, you coming to the thing tonight? I'm like, dude, I'm in the hallway talking to people eyeball to eyeball, right?
What you should have told Rick Ross is just, oh.
He's the best.
Oh.
He's a client of ours in one of our business. We bought a business last year. Cody Barton and I bought a business called The Plant Guy. And that company delivers giraffes to Rick Ross's big farm in his big estate. So we know him personally, which is really fun. But my point of bringing them up is like, I chose to be in the hallway rather than hanging out with the cool people, right? Because I'm obsessed with looking at these people in the eye. And this lady comes up to me. I actually have a call with her today. And she says, man, your speech on stage moved me. I didn't talk about creative finance. I talked about getting a detailed game plan for your individual self and what is applicable for you. And she comes up to me in the hallway. I've got 300 people crowding me. Like I can barely move. And people are just waiting for their turn to talk to me about their individual plan. And I look at her and she goes, so can you tell me what I should be doing? And I go, anything but wholesaling. You should do anything but wholesaling. I bet you are, based on how you're dressed, what brand you're wearing, you spent little time on your hair, but a ton of time on your dress and your makeup, which means you don't have a lot of time, which means you probably are an attorney or a this or a that, and you make a lot of money in your active job, and you probably have a lot of extra time, and you're thinking wholesale is an easy way for me to start because I don't want to be a real estate agent. She's like, how the hell did you know all of that? I go, well, look at your dress. You have a nice dress. It's probably this brand or that brand. You have a purse that is 3 years old. You spend good money on it. You were intelligent about it. You're not somebody that's splurging on new things all the time. You'll buy nice stuff, but you're simultaneously frugal, which means you're intelligent. And you're also daring and you're willing to spend money. You're not like a cheapskate. You're buying everything from Target. You also are Indian. So sorry, demographics and like race and religion and these things actually determine where you're going. And your parents probably push you to be a doctor, an attorney, or something, or an engineer. And so I'm just guessing based on your personality and how you walked up to me, you're an attorney. She goes, oh my gosh, I'm a litigator. I does this, that, and the other. I go, you should be doing anything but wholesaling. She's like, what should I be doing? I go, I bet you probably have $500,000 sitting in a bank account doing nothing for you right now as a safety net. She goes, I literally have $500,000 sitting in my checking account. I go, this is all I do. What I'm uniquely good at is understanding and identifying somebody without them even saying a word to me. I can tell you your whole life story by looking at and picking out things about you, how you walk, how you hold yourself, all this kind of stuff. She's like, what should I do? And I go, you should invest $100,000 of that $500,000 as an LP, limited partner, in somebody else's big multifamily fund and get close to that person and learn the multifamily game. And you're around a lot of attorneys at your firm. They all make a lot of money. She's like, yeah. I'm like, you should be raising money from attorneys and showing them how to get into real estate by going and starting your own multifamily fund. She goes, but how would I learn that? I go, I just told you. You go invest in somebody else's fund, $100,000. You get some passive income coming in, you talk about it, and then you tell everybody else in the firm, like, hey guys, if you want to go and buy an asset together, I know a fund that'll do it. They'll find the deal, they'll run the deal. Let's go do this all together and let's pool our money together, go buy an asset. She's like, you make it sound so easy. I'm like, it is easy when you have a detailed plan for your individual personality.
Yeah.
And so the way I built my community was that way. I have, nobody knows this, but I have 2 to 3 1-hour one-on-ones every single morning before I start my day. So think about this. I have a 1-hour one-on-one with somebody for an hour, and then I follow up with another person for an hour, and then I follow it up with another person with another hour. Spread that over, 250 days out of a year. I'm not doing it literally every day because I travel and whatnot. That's 750 people I give unique, detailed plans to. I see patterns. I see this. I see that. And then I create avatars and I tweak these avatars to the point where when somebody joins my community, they go, that's me. That's my path. Pace has already done 45 one-on-ones with people that are similar to my personality. I'm going to watch a couple of those one-on-ones, get a detailed game plan. And then I can, if the way people get a one-on-one with me is they help somebody else get their first deal, then they get a one-on-one with me. And so I create really fun ways that people really integrate and lead the community rather than become a participant or a student. So it is weird. Like now I just got asked to speak on stage for Funnel Hacking Live for Russell Brunson. He's become a good friend. And, we do $100 million a year in revenue in our info products. That's insane. I don't even pay attention to that dollar amount, but Russell had to tell me, he goes, you know how much you guys do in revenue? I go, I have no clue. And the way that we attract so many people is because we built it so that every personality type is looked on and given a detailed game plan, because not only should they not learn about what the other personality types are doing, they should be bringing value to the other personality types based on what those personality types are lacking. And so it's a lot of work and I'm obsessed with it. It's become a labor of love and a passion of just being obsessed with the answer for the individual rather than a blanket answer. Like I see people get on stage and go, yeah, provide value to people and then you'll get attention. I'm like, what does that mean? Tell me what does provide value mean truly? Just find out what that person needs and give it to them. Okay, that's not detailed enough. And I get really obsessed and I'm like, that's not a good answer. There's people in the audience writing that down on a piece of paper, provide value to other people. And they're never going to do anything with it. It's too ambiguous.
Yeah, and they go home and they're like, what do I do? Where do I start?
Right. But they're pumped. They're motivated for like 24 hours. And then they come home and they don't do shit, And so I just get obsessed with how do you get the success rate of people learning to a much higher level? And, jumping into like what you do, I think, guys like you and a couple of other people in the industry of infinite banking, that industry is ripe for disruption. And the biggest disruption needs to happen is storytellers like yourself need to be, and you are doing this, need to be better at educating people on what the hell they can actually do with an infinite banking policy. Because what I see a lot of insurance people do, and this is why a lot of people will buy a whole life policy, but then they don't do anything with it, because they're like, well, I see the benefits, right? I should buy a policy instead of putting it in the bank. I should buy a policy because I get a death benefit, and then I can go get a loan against my insurance policy and buy my car. That's an example a lot of people use, but that's not really applicable. It's like, how can you teach people how to make money with their policy rather than just save money, right? This ain't the Dave Ramsey show. We ain't trying. By the way, Dave Ramsey hates insurance policies because he's a complete dumbass. Man, I could talk about this for hours. Like,
Pace said it, not me. I was thinking it, but Pace said it.
I look at Dave Ramsey. He's actually the opposite of dumbass. He is so hyper intelligent and he knows his audience so well, Devin, that he knows how to sell them fear because they're in the phase of their beginning journey of financial independence. And so what he does is he meets them where they're at, which they're in a fearful mindset, and he feeds that fearful mindset with more fear and more this and more that. The guy did $300 million in info product sales last year, 3 times what my company does. And I'm being asked to speak on stage how I do what I do. So the guy's 300% more than I am. The products he sells feeds into the fear of the audience members that he has. And so if you're telling people, don't buy whole life, don't do this, don't do that, all he's doing is navigating you into the pathway that he needs you to spend the money. Okay, cool. Brilliant marketer. I respect the game. And so by no means do I think he actually believes what he's saying. I bet you there's a high likelihood that he probably is one of the biggest infinite banking policyholders on the planet.
Yeah, he probably has many policies, uses them, and then just talks down upon them because it can't make him any money.
Or
he sells term insurance.
There you go. So he chose a different path to make money on, right? Somebody told me at a younger age, you can do anything you want in this world, Pace, but you can't do everything.
Yep.
So Dave Ramsey looked at it, he's like, shit, I can't dominate a world where Devin Burr's already in. Devin Burr's going to tell better stories than me. I can't be an infinite banking guy. So you know what I'll do is I'll shit on that. And by the way, infinite banking requires somebody to actually learn something applicable and something high level that wealthy families are doing. That's like phase 5 or phase 3 or maybe even just phase 2 of the hierarchy of intelligence when you're entering in this world. I'm going to feed on the lizard brain. The lizard brain, the prehistoric brain is like, I have this one little acorn and I need to protect it, right? Like, Ice Age, the movie with the little squirrel that runs around with a freaking acorn. He's trying to eat the acorn the whole time. That's Dave Ramsey's followers.
Yeah.
They got this little acorn and they just want to protect this one little acorn. They spend their entire life trying to protect this one nut they have. Meanwhile, guys like you and I are planting nut fields. We're planting trees. Right? We're planting trees that are going to drop these nuts all over the place. These nuts, you know what I'm saying? So I look at Dave Ramsey and I say, you're genius. That's not my mom. That's not the people I'm speaking to. That's not who Devin Burr is speaking to. He's speaking to somebody who's like, dude, I'm not here to save my money. I'm here to make more money. So again, looking at the infinite banking world, which is not my world, I now have policies. I work with, I work with your team. I work with other people. And I have these policies. And I'm like, man, if infinite banking people were actually using these policies to lend money out and tell those stories and teach people how to lend money out, I think lending is probably one of the best. Like the phone call I was on right before we got on here, I'm double closing a guy's deal. He needs $130,000 to double close on a deal in California. He's going to make $400,000 on it, but he doesn't have a dollar to his name, so he can't close on the deal. The homeboy's going to make $400,000. I'll pull the $130,000 off my infinite banking policy. I'll then loan it to him. I'll make like $8,500 in a 24-hour time frame, which is like 7,000% return on my money.
It's actually more. It's actually a lot more. This is one thing, and this might be new to you too, because you're not like totally immersed in infinite banking, but if you're annualizing the return, right, 7,000.
Yeah.
So if you make 8,500 in 24 hours, what would you make in the year, right? Here's the thing: is you're not using your money, you're using the insurance companies.
Right.
Your only money being used is the interest paid to the insurance company. So if let's say 5% interest on $100,000 is $5,000 a year, you take that to what the annualized return would be. That's your actual cash on cash return. It's stupid high.
Yeah.
Stupid high.
That's a really good point. Really good point. I think that's also another misnomer that a lot of people, it took me probably a good year and a half to truly understand the difference between I'm not borrowing money out of my policy. I'm leveraging
against it.
Yes, I'm leveraging the asset. And that is that's got to be, for me in the creative finance world, what people are confused by. They go, how can you take over somebody else's mortgage when their name is on the mortgage? I'm like,
two separate things.
They're two separate things. One's a deed. I take the deed. I don't take the mortgage. I'm paying the mortgage, but I'm not taking the mortgage over. I actually just take the deed and I pay the mortgage. And the mortgage company doesn't know anything about it. People are like, wait, aren't those the same thing?
Nope.
So I have to tell an analogy about Costco to get people to understand it. Like, hey, I go to the Costco. Does Costco care whose credit card I use? No, they just care that it works. And then I buy the groceries. Let's say I use my mom's credit card. That's somebody else's money, somebody else's credit I'm using. I can use my mom's credit card to go through Costco. Costco doesn't verify whose card I'm using. They just make sure the PIN is working. I sign on the thing. They give me a receipt. I have the groceries. I asked people in an audience, like 5,000 people the other day in an audience, I go, who owns the groceries if you use your mom's money? And it actually wasn't your mom's money. It was Visa's money that gave your mom a loan against the credit card. They're like, oh, I guess Visa owns it. I'm like, no. The person who has the receipt, the person who owns the deed of real estate is a receipt on groceries. And so people are like, oh my gosh, shit, those are two different things. So I think in like infinite banking, the biggest thing I would assume that people, I'd be curious to hear, what is the biggest thing that people have a hard time wrapping their mind around? I think number got to be top 3 has got to be, I'm borrowing my money from the insurance company is not true. You are getting a new loan against the value of your policy, and the policy is basically the what do you call it? The
collateral.
The collateral.
Yep. So here's how I give an analogy, and this always kind of clears it up for people, because that is the biggest thing. They're like, why would I borrow my own money and pay interest to borrow my money?
That was me, bro. I literally was like, F you, I'm not giving an insurance company my money just so I can borrow my money. It's not my money.
Right.
It's now the insurance company's money. Why do I want to do that? I'll just pull money out of my savings account. Kiss my hairy ass. I'm not giving an insurance company my money. And
the biggest thing, dude. So here's what I tell people. I'm like, it's like a house. Most people understand how a house works. You make a payment on a house, you build equity, right? Once you build equity, you can tap into that equity using a refinance, an equity line of credit. But when you do that, whose money do you borrow? You borrow the bank's money. They're just using the house as collateral. You've built equity in the collateral. So with a policy, you're putting money in. That's your collateral. That's the house. You're building equity by putting money in. Then you borrow from the insurance company. You're just borrowing from your future death benefit. So you're not using your collateral. That's sitting there growing and compounding. So think about if you borrowed from a house and the house was guaranteed to always go up in value, tax-free, which does not happen. Houses go up, they go down, they go flat. Life insurance goes up. It only goes up, and it goes up tax-free. So you're always able to borrow more as long as you keep putting in your premium, your collateral. So as soon as I explain it like that, most people are like, oh, that makes sense. So I should put more in, right? I'm like, exactly, because then you can use more.
Yeah. The way I was explaining it to somebody the other day, I was like, guys, I'm not a infinite banking guy. I just have like finally started understanding it to a certain point where I'm like, I already own a lending business. I already own a real estate business. I have ways to deploy this capital. And so I say, guys, like infinite banking only really becomes infinite when you start using the money to make more money outside of your policy, right? Like people think, I'm going to keep putting money in my premium. Like, okay, cool. There's amazing benefits there. Like you get a death benefit, but if you're going for the death benefit, just get term insurance. Like,
right.
You'll get way better term insurance benefit, pound for pound. Like that's not the number one reason you should buy it. But I told somebody the other day, think about it this way. If I go put $1,000 into a savings account right now, 3 months in a row, how much money is in that savings account? Oh, Pace, well, it's $3,000. Cool. If I go put $1,000 for 3 months in a row in an infinite banking policy or a whole life policy, how much money do I have in there? And they're like, well, $3,000. I'm like, okay, cool. If I died today, this is the best thing best question. I go, if I died today, how much money will my wife be able to take out of my savings account? They go, $3,000.
$1,000.
I go, if I die today, how much will my wife get for my infinite banking policy? They're like, $3,000. I'm like, no, millions.
Yeah.
Couple $1 million, $1.5 million. And I'm like, so that alone convinced me that's worth my time. Okay, cool. Now, the next thing that I understood, that by itself just lets you know, like the death benefit far outweighs anything else. Like my wife is taken care of just by me putting $1,000 into that thing every single month, which is great. The next thing, tax-free. The thing that was confusing me for the longest time was that thing of, wait, am I borrowing my own money? Like, I don't get it. Am I pulling money out of my policy? Because then if I pull my money out of my policy, then the insurance company can't deploy it into ETFs or, blah, blah, blah. And they can't go invest it and give me a return, right? Which was very untrue. So I told this girl the other day, I said, all right, imagine you have a car that's completely paid off. It's worth $10,000. You got a Honda Civic. It's worth $10,000. You could go sell it on Craigslist right now for $10,000. But you use that Honda Civic every day to go drive Uber. And so you make money from that car. You don't want to sell that car, but you just found out you got a $5,000 thing you got to pay for a surgery to fix something in your mouth. Let's say it's a tooth surgery. And you need $5,000 today. Could you not go to your neighbor and go, hey, neighbor, I have a car that's worth $10,000. Can I borrow $5,000 from you so I can go pay for this thing? You'll use the car as collateral. The neighbor says, yeah, absolutely. That car's worth $10,000. If worst case scenario, you can't pay me back, I take the car. We're good. Yeah, absolutely. It sounds like a great trade. Here's the best part about it. With an infinite banking policy, even though I'm borrowing against the value of the insurance policy or the value of the car, the vehicle, the vehicle can still earn me freaking money out in the market, and it can still drive Uber, and it can still bring in money on a monthly basis. And so I'm borrowing against something as collateral. I'm not selling the car to get, like, that's what I thought. I thought I'm cashing out my insurance policy. I thought it was like, oh, sell the car, get your cash, pay for your tooth thing, get that money back, pay the insurance money back. That's what I thought it was for the longest time. But when I realized,
what most people think,
yeah, that's got to be the number one thing that people just don't understand. So what's another
when you can, when you can learn how to make money with it, that's when it's a cheat code. And you're 100% correct that people should be teaching that more. And we definitely do. Like what I do with it, this is the main thing I do with infinite banking, guys. And I'm going to give you real numbers so you can see how advantageous this is. If I've got $100,000 in cash value in my policy, I've got that, I can use it right away. To Pace's point, if I use that, I'm not selling that 100 grand. That 100 grand is still creating compound interest from the insurance company. Guaranteed interest, tax-free, plus dividends. It's about 5 to 6% tax-free. So that's going to make me, let's say, $5,000 in 1 year. I'm going to use it and lend it as a private lender. I do a lot of that because it's the only passive income there is in real estate. I lend it at 15%. So I'm going to make $15,000 outside the policy. Inside the policy, it's making, let's say, 5. So together, it makes me $20,000. What do I actually have in the deal? I just have to pay a small amount of interest to the insurance company because I'm not using my money. I'm borrowing theirs. I'm borrowing from my future death benefit. So I pay 5% generally, is around what it is. I just turned $5,000. That's the annual interest into $20,000. That's a 400% cash on cash return.
Now,
and if I would have just taken the 100 grand and lent it at 15%, I'd make 15%. By simply putting in the policy first, I make a 400% cash on cash return.
Plus you get a death benefit, which is like, I think the biggest thing that people have to understand. I didn't understand this truly of like, wait, the insurance company is basically saying, yeah, no problem. We'll give you a loan against your death. If you die, we get paid back. Right. That's basically it. I heard this phrase. Somebody said, I'm worth more dead than I am alive, which was basically him making a joke about his whole life policy of like, if I die today, I've borrowed $10 million against my $12 million policy. The insurance company, they get all their money back. I die, they go, oh, you owed us $10 million. You borrowed it and you did all this stuff with it. You're doing all this crazy things with it. We're going to wire a check to your wife for the $2 million difference, but we got our $10 million back, right? Like the death benefit is their guarantee. So their guaranteed way of you paying them back is you die.
Right. They just don't want it to happen soon. They want it to happen a long time from now.
Of course. So they wanted to compound. They wanted those things to work out. And, you know, it's interesting. Like, here's another reason why I didn't want to get into whole life policies for a while. I go, and this is the thing that a lot of people don't understand. I have a policy I have two policies. I have an IUL and I have a whole life policy. And it's really interesting to see the dichotomy of how much people hate IULs and how IUL people hate whole life and whole life hate IULs. It's like Crips and Bloods. It's so interesting how much they hate each other. And I don't really see that often. People that are like, yeah, I see value in both. Most people are like, dude, just go full whole life. You're stupid if you go IUL. Then the people that sell IULs are like, dude, whole life is so dumb, blah, 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 blah. It's not aggressive enough. It's whatever, right? But throw that to the side. I've got a policy, an IUL policy. I put 20 grand in a quarter. So 80 grand a year. And then I've got a whole life policy. I put 25 grand in a month. The thing that sucks about a whole life policy that I think keeps a lot of people away for their first year is their lack of patience.
Mm-hmm.
Because you look at like my policy in 11 years from now is making more money on my dividends than what my cost to put money in on a yearly basis is. But it takes a while.
Mm-hmm.
And at some point I could decide I'm not going to put any more money in after year 11.
Mm-hmm.
But the biggest thing was the insurance guy makes a ton of money in the first year, and the insurance company takes their pound of flesh in the first year. So if I go put in $300,000, let's say, into my policy, I can't borrow $300,000 against my policy because it's not available yet.
Up
right?
to 90%. Yep.
Yeah, so like my policy is a little bit more aggressive, so I think I can borrow like 60% of mine in my first year. I'm like, I want it to grow faster.
So yours is geared for long-term growth.
Yeah,
like
long-term growth. Yeah.
instant liquidity.
And
Yes. Just so you guys know, that's the difference. The more liquid it is up front, the less it's going to grow in the long term because you can't put as much in long term. The less liquid it is, the more you can put in long term, so it grows more because you're able to put more in for longer. So,
and I think that maybe like as you're consulting your clients, I'm sure you're advising them based on their age, based on
they're
what
looking to do, and
like
the
where are you at?
avatars, like you're saying. Yep.
Yeah, like there's an avatar to every single person, right? And so like a good insurance guy like yourself will sit down and go, all right, let's detail out a plan what works for you. Don't listen to what Pace is doing. Let's give you a detailed plan on who you are and where you're at. Like $25,000 a month is definitely $25,000 a month. Don't get me wrong. It's not like it's not a lot of money to me. It's the old blue collar guy from 15 years ago be like, wait, what? We have $25,000 at some point we can just put into a policy? What the freak are we doing? Are we billionaires? You know?
Right.
But for me, I chose a dollar amount that I knew I'd never have to worry about the $25,000 and I could continue to put that money into the policy. I then told myself, I'm going to put money into that policy for a year without even touching it. And then I'm going to wait for it to be basically become available at a certain point. I wake up, I'm like, dude, all right, cool. I put in 400 grand. I've got $290,000 available for me to go loan, and I'm going to get to work. So I started getting to work and lending the money out. And that
while that 400 is still compounding.
While the 400 is still compounding. And so I think the biggest challenge for me was, you're telling me that I basically don't have access to $110,000 of my own cash for a while, and that I have to keep putting money into this thing. But then when I saw the 10-year horizon, I was like, okay,
this makes sense.
This makes sense. It's almost like I have an employee at the insurance company just working for me full time, but it's like a snowball going down a hill, and it doesn't get its momentum until like year 3, year 4, whatever. And bro, like for those of you guys out there that have kids, you know how fast 3 or 4 years goes. So, you know, obviously go work with Devin Burr, get signed up for a whole life policy. But what you got to do is figure out what's a dollar amount I can put into a whole life policy that I won't even notice is coming out of my bank account every month. Could be 1,000, could be 5,000, could be 25 grand, whatever. I noticed 25 grand coming out of my bank account. Believe me, there's been times where I'm like doing a transaction and I send out $300,000 to loan money to somebody, and then I have no money in the account. And the next day I have an auto draft for my whole life policy. I'm like, oh crap, I need to move 25 grand. Like, I know the pain of that. I definitely do. But if you find that number that you'll forget about, oh my gosh, man, it's basically like having this silent gangster working for you at the insurance company. And it is cool to understand that like there's never been an insurance company that's ever failed, and nobody's ever lost a whole life policy, and nobody's ever got scammed out of a whole life policy, which is pretty phenomenal.
Right. Because the thing is, if an insurance company goes under, which rarely happens, they're the most stable companies in the nation. If they go under, another insurance company will just buy them up and you still have the contract. It's just with a different provider. So a couple of things I want to touch on that you said, which is kind of funny. I'm in that situation where I'm worth more dead than alive. So like my net worth is right around like 6 million. That's what it is currently. So full transparency to all you guys watching, it's about 6 million. If I were to die tomorrow, death benefits are about 30 million. So my wife would get $30 million if I died tomorrow, tax-free. My net worth is 6 million. So once things are sold off and things like that, there might be some taxation. So she's not going to get a full 6 million. She would get $30 million if I were to die tomorrow, which is crazy.
I call it my death worth.
Right.
Like I got a net worth and I got a death worth.
It makes you sleep well at night because I know that if God forbid anything happens to me, like you might actually know him. He just passed away a couple weeks ago. Do you remember Alan Whitworth?
Yeah, I know Alan Whitworth really well, yeah.
Yeah, did you know that he passed away?
I did not know.
He got shot working construction like 2 weeks ago. Shot and killed. And then the person fled the scene. They don't know. So
it was a hit and run?
Yeah, it's sad, man. He got an altercation or something. You know, Alan kind of had a hot head, but he probably said the wrong thing to the wrong person. And
yeah, I have a story about Alan Whitworth where to be honest with you guys, I don't want to speak ill of the dead. Alan was trying to get into real estate back in 2017. He came to me, and I was known locally as the creative finance guy. And Alan came to me and he goes, I really need help. And I go, okay, cool. And he goes, you talk about on your Instagram, you always help people. He's like, he was so aggressive to me.
I can see that.
Put your money where your mouth is. And if you can't help me, I think you're full of shit. You should stop posting on Instagram. Like, that's how rude he was. Like, right out of the gate, just super aggressive. And I get it. I spent a lot of time with him. So I went in, I helped him get a deal on a street named Chesterfield on the West Valley. He got paid $10,000. I bought the house subject to. I went to the appointment with him, closed the deal. He got paid $10,000. And he's like, all right, you're not, he wasn't like, dude, thank you. You just changed my life. He was like, fine. You're not
full of shit.
You're not as full of shit as I thought you were. I was like, bro, this guy's hard to impress. Okay. So I helped him. He would come to my office. I'd buy lists for him. He'd sit next to Cody Barton. Literally, this guy spent a year and a half, like, in my office, absorbing and learning stuff, probably 1 day a week, 2 days a week. Then he goes out, okay, on YouTube, and he makes some post, and he's like, Pace Morby's so full of shit. I texted this guy. He hasn't replied to me in 3 days. I'm telling you, this guy's been a scammer the whole time. I'm like, bro, I've helped you do 40 deals. And now I'm traveling and I'm on vacation with my family and I don't text you back in 3 days. And your first reaction is, F this guy, let me go make a YouTube video about him. So I go to his house. I actually was like, Alan, let's figure this out. What the heck, man? Has anybody helped you more than me? And Alan replies to me, he goes, dude, I've never had actually anybody help me. And I said, Alan, is there any surprise why, bro? You're so aggressive. You're so mean. Like, and anyway, this conversation we had was a come to Jesus meeting on his doorstep. And I confronted him very positively, but I went to his house and one of my conversations with him was about his wife and his kids. And he ended up getting divorced, I think.
Yep.
But I said, look at your family, bro. They need to rely on you as a stable character. And these multiple characters you're playing, one of them is not going to help your family out. One day somebody's going to come up to you and punch you in the face by how rude and aggressive you are. And Alan and I then kept our relationship for a while. He would text me, he goes, you'd be really proud of me. I did this. You'd be really proud of me. I did this. You'd be really proud of me. I did this. And then I heard from his partner about a year ago that Alan got out of real estate because him and his partner had a falling out. I'm like, Alan, you're back to your old ways of like fighting with people all the time. Like, holy crap. And so the point you're bringing up is like Alan struggling with whatever trauma he had from the past. He upset somebody, something happens. He probably owed somebody some money, something along those lines. And he's back running construction because obviously his partnership didn't work out. Probably didn't have insurance. Probably didn't have life insurance. His family, his wife, who's probably relying on child support, she's out of luck. His kids, two kids, they're out of luck.
Yep.
And they're not set up for life. And so for you men out there, you never know what can happen, right? I had a buddy of mine, John Rulin. Do you know John Rulin from Giftology?
Yep.
So John Rulin just passed away about 4 weeks ago.
I didn't know that.
Yeah, he just passed away. He delivered, I had a friend of mine that gets a painting made for me. It was like an $80,000 painting that John Rulin curated. For those of you guys that don't know John Rulin, he owned a company called Giftology. He was the world's best gift giver. Like, this guy could make a princess cry with how thoughtful his gifts are. Like, what do you get a princess? What do you get a monarch? He was so good and detailed at his craft. Anyway, he just passed away just being on a hike with his team. But you know what the answer was with his family? It was like, at least he had a life insurance policy that paid out everything. His family is set up for life.
100%.
And it wasn't, my company that is a big, big company. His company, sadly, was basically him and like 50 employees. They were doing a lot of revenue, but without John there, the magic goes away. And so the company goes away.
Yep.
And the family, his wife and his kids that are relying on him and all the bills and all the future bills and all the things, there's no way that company is going to be around to continue to pay those bills and draw a salary from. And so basically that insurance policy that he had, that whole life policy, paid out a big check to his wife and she's fine.
Yeah. Would she rather have her husband? I would hope.
Of course.
But when something happens, like what happened to Alan, it was unfortunate, and it probably was him just, running his mouth, being Alan. Like, Alan was just a hothead. That's what he was. I think he had a good heart, but trauma in his past made him a hothead.
Yes.
And He probably just had that hot head with the wrong person that had a gun, shot him, and now he's gone. And his like to your point, his kids, his ex-wife, they don't have anything. His fiance was actually starting a GoFundMe just to cover funeral expenses. That's the part, is like, we are all guaranteed to die. It's gonna happen to you. It's gonna happen to me. It's gonna happen to everyone watching. We just don't know when. So if you have a policy in place that pays out for your whole life, whenever that happens, you're gonna be taking care of your family. And the cool thing about infinite banking policies, I'm sure you know this, the death benefit starts out smaller because what you're doing is you're lowering the cost of the death benefit, where all the fees and all the commissions are, and then you're overfunding it to get cash value.
Yeah.
So you have a smaller death benefit at first, but all of your growth, all of your dividends are purchasing more paid up additions. That's extra cash value with a little bit of extra death benefit. So as that happens over time, your death benefit gets crazy. Right now, if I were to pass away, $30 million. When I'm likely to die, 80, 90, 100, I take care of myself. The death benefits are like $200 million. So I'm able to use all that money now while I'm alive, and I don't interrupt that compound growth of everything growing. It's incredible once you learn it, and especially if you can use it with an asset like real estate, where you get all of your depreciation and all of your tax benefits. Because I know you own a ton of real estate, right? Probably 2,000, 3,000 doors at this point.
Yeah, 2,150 doors.
So you don't pay taxes.
No, I got a $15 million write-off for this year for my cost segs.
Oh, that's incredible.
I've got like $2 million rolling over for next year because I don't need all of it. And so like it's carried over from this year because I'm doing my taxes for 2023 currently. And yeah, I haven't paid federal income taxes for 7 years.
So that rollover goes against income next year.
Correct.
And can it roll over 1 year, or is it multiple?
You can carry it over, I believe, 5 or maybe 7 years. You have a couple of years to choose to use it.
Okay. So that's a beautiful thing. You don't pay income tax. Me and my wife were just talking about this morning, actually. Most people know what they pay in tax, income tax. That's what they think of with tax. I paid X amount of dollars. I bet nobody knows how much they actually pay in tax when you add up your property tax, the tax on your food, the tax on everything.
Employment tax. Like, think about 600 employees. How many employment tax things I have to do? I have matching taxes. I have Social Security benefit matching. I have all sorts of things I have to do. Consumption tax, property tax. Consumption tax is, if I live in Montana, I don't have consumption tax. So I could buy something, no sales tax. I buy something in Arizona, you're at 8-point-something%. So like, it's interesting that I earn $1 in Arizona, and let's say I don't have any tax benefits. I earn $1, I pay 40% of that dollar immediately to federal and state income tax. I now have 60 cents left. I then go to the grocery store, okay? And basically my 60 cents is only worth about 54 cents because the rest of it has to go to sales tax. So really, I earned $1 to have 54 cents. That's sad.
100%. And that doesn't take into account when you start paying bills you're paying interest to your car, to your house, to your student loans, to your credit cards. There's actually a statistic on this, and you guys can look this up. This is with the Social Security Administration. You can look up. There's only about 5% of every dollar that the average American earns, they actually have left over. Yeah. 5 cents out of every dollar. That's insane. And then what we're taught is like, go take that 5 cents to become wealthy. Take that 5 cents and go make a big return with it. If you go try to make a big return, what do you have? You have really big risk. Bigger the return, bigger the risk. So you could take that 5 cents and go try to make a big return and lose it all. And if you lose 50%, you have to make 100% just to get back to square one.
Yeah.
Like, people's mindsets are so messed up. What you need to do is stop giving away so much money to different institutions. That's why infinite banking is so good. You can actually recapture all of the interest you're paying to everybody. So not take any more risk, not go invest, and just control who's getting all your interest. So instead of giving money to everyone else, you're keeping it. So you have more money inevitably.
Yeah.
Then you can take it and you can be a little risky because you're not using all of it to go invest. So I don't know, man. I could talk about it for hours.
I just reached out to my rep. I know you guys are on the same team. I reached out to my rep and I was like, hey, what does my death benefit look like in 20 years? And my death, actually 11 years. My death benefit in 11 years on this policy. Today it's 7.6 million on this one policy. In 10 years, it'll be 13,400,000.
Is this the one you're putting 25,000 a month?
Yeah. So basically in 10 years, my death benefit doubles, right? Here's what's cool. I put in essentially $3 million into this policy over the next 10 years, and my death benefit goes up an extra $7 million, right? So I have a net gain of a death benefit of nearly $4 million, which is awesome. But more importantly, my ability to borrow against that policy, oh my gosh, it gets so filthy. I can borrow every single dollar I've ever put into that thing, and then starting in year 11, year 12, year 13, the amount of money I can borrow against my policy just gets absolutely insane, and I start making like significant dividends. You know, by like I'm looking at year 20, my dividends on year 20 is I'm making 80 grand a year in dividends on this policy.
And it's probably more because the dividend scale they use is conservative based on prior dividends. So they're kind of forecasting what if you got that same dividend, but those dividends were based on the economy and all rates being super, super low.
Yeah.
So as rates go up, which they have, the insurance companies can lend money out, blocks of money from their general funds and make more. So the dividend scale actually goes up. Think about like in the 80s when mortgages were like 20%, dividends on policies were like 14, 15%. Right now they're about 2%. So it'll probably be higher. That's a real conservative 80 grand, I think.
So a couple questions. Why does my guaranteed death benefit not increase past year 11? Is that a normal thing?
Yes. The reason for that is because the guaranteed amount is if you just paid your base premium. So you're paying 25 grand a month, which is PUAs, that's overfunding, and your base. If you just paid your base, so basically for the first 10 years, you've already paid enough base to guarantee that death benefit. Where you're getting the extra death benefit is you overfunding it every single year.
Got it.
And
Okay, cool.
those dividends buying more paid up additions.
Okay,
but
cool.
Dude,
so if I continued past year 11 overfunding besides my base, I would get an increased death benefit.
Yeah, you don't have to do anything to do it. The company does it automatically. It's called your dividend option. So you can choose for your dividends to be paid out to you. So you can just get a check.
Okay.
But your dividend option, if it's built correctly, goes to buying more paid up additions, which gives you more cash value. It's all guaranteed to grow. It's tax free. And then it bumps your death benefit up slightly every year.
Okay, here's a question for you. What if I come into, let's say, $500,000 this year that I'm like, I don't know what to do with this cash. Can I overfund a policy $500,000 today without any sort of repercussions?
Not a current one. You could start a new one.
Okay.
Yeah.
Here's the one thing I didn't like about whole life policy. Another thing I didn't like about it. I had to overcome this mentally. I was like, you're telling me I'm basically marrying my policy. Like I'm not getting out of this bill. It's basically a monthly bill every single month. And I'll tell you how I switched my mindset away from it being a negative to a positive. But my mindset was like, are you kidding me? Every month I have to pay this policy no matter what. What if I have a bad month? What if I this? What if I that? And I went through all these what ifs. I was like, dude, I haven't had a bad month in 10 years, right? Like I'm fine. Stop it with this small mindset. But the way I overcame the mindset was I said, dude, this is a reminder every month that you need to be using the money to lend out. Every single month I put another 25 grand in. It should remind me, oh crap, I have money available to borrow. I need to remind myself to go and leverage that and use that money. Because this is another thing I don't like. If somebody calls me today and they go, hey Pace, I have a double close I need 130 grand for right now. My immediate tendency is I'll just go to my bank, Chase, because it's a simple go into the thing, wire the money directly to the title.
Yeah.
Insurance policy is not that easy, right?
It can be.
I got to request my money, comes the next day, I can make it come really fast. Then I get my money, then I wire it out, right? I could just keep them.
It can be same day.
Okay, but it's another step, right? And when you're a busy person,
no, you can have it be just you write a check.
Oh,
So you get
you need to get my own LLC and borrow the money and keep the money in the LLC?
No. So what you do is you get a cash value line of credit. So they'll only do this for whole life. They won't do it for your IUL.
Who's that?
Banks.
Okay, so I can go to like Chase and go, hey, I have cash value, and here's my line of credit, and they can give me a line of credit against the cash value, and it's probably going to be 70% of the cash value, or is it 100% of the cash value?
I think it's like 95, depending on how much you have. So
Okay.
you basically, they give you a checkbook, and they use your cash value as the collateral to give you a loan.
Interesting.
And depending on where rates are, it could actually be better than borrowing from the insurance company. Like when rates were really low, I was borrowing from my cash value line of credit at like 3%, opposed to at 5% from the insurance company. And to your point, when you borrow from the insurance company, it takes a day, 2 days, 3 days. If you have a cash value line of credit, you just have a checkbook. You could do wire transfers.
That's what I need.
I'll give you the company that we would use because there's certain companies that only accept like certain insurance companies. Okay. There's other companies that accept like a lot of them. So you could bundle your policies together.
Okay.
I've got
what about IULs? Do people not like IULs?
Banks don't.
Okay.
That's why I can't get on back with IULs, because if banks don't like it, there's a reason behind it, right? If I were you, what I would do, since you're still young, dude, is how long have you had that IUL?
I've looked at it and I do not want to. I really hate the feeling of let me cash out and transfer and losing $200,000-$300,000. I really just don't like that.
Well, that's what I'm saying. How long have you had it?
Like 2.5, 3 years.
Yeah. So I would get to where you've gotten past your surrender period, which is probably 11 years. And that's when your accumulation value is the same as your surrender value. So now
I can quit and be like, hey, I want to transfer this policy value to something else.
Right.
Yeah.
So you could do a 1035 exchange where it's like a 1031. You're taking one like policy to another policy. No taxation. The reason I would do that if I were you, because the IUL, it's based on a 1-year annual renewable term insurance. The actual insurance part is term insurance. It renews every year. You get older every year. So every year you're getting older, your cost of insurance is slowly going up. Once you get to like 55, 60, it's going to exponentially go up. And if there's a year where there's no growth, you're going to lose money because the cost has to be paid from your cash value. That doesn't happen in whole life. Whole life only goes up and the cost stays exactly the same.
Why do people like IULs then?
Because they're the most undereducated product. People are just pushing them to make commissions and they don't even know how they work. They're saying there's no downside risk because there's a 0% floor, but all the upside potential. That's the sell of them. That's true in a vacuum. If costs never went up, they're going to go up. It's guaranteed to happen. So if I were you, dude, I would get to your surrender period being over, which is probably year 11.
Yeah.
And then just convert that policy over to a properly structured whole life. And that way you don't have the risk.
I got sold on my IUL. I was at a mastermind. This mastermind is called the Black Card Mastermind. It was invite only, no cost to be in the room other than travel expenses, which is really rare. Most of these high level masterminds. I'm in one right now with Dean Graziosi, Tony Robbins, Lewis Howes, a bunch of people, and it's like $250,000 a year to be in that one, and it's worth the money. Mm-hmm. But I'm in this mastermind that was nothing, and I was like, okay, cool. Like, how is the person making money from running this mastermind? I guess they're just being altruistic and they're trying to help. Then it wasn't until like a year later that I realized like they were selling policies, everybody that they were inviting to the thing, and it was all IUL stuff. And it wasn't until I learned whole life versus IUL that I was like, oh, I got all excited. There was a presentation from a guy, he killed it, and I put in $20,000 every quarter into this thing. And that, if I was an insurance sales guy, I would much rather have a captive audience of high-level people in the room and charge and sell them an insurance policy than I would charge for a mastermind fee, because I would make more money.
Right. Especially with IULs, dude. The IUL, he probably made, you can make up to 120% of the first year premiums.
Yeah, so he made probably $100,000 on me that year.
Yeah, because you put in 80 the first year.
Yeah.
So yeah, he made probably $96,000. And full transparency, that policy, as if it was properly structured whole life, like the way we structured, just so you guys know, it's funny, this has become like an insurance thing, and that usually happens when someone uses infinite banking that I'm talking to, because I can just go on for hours about this stuff. But the more liquid the policy is up front, the less commission the insurance agent made, and then vice versa. So if it was structured properly, we would probably give you about 80-90% liquidity. So the cost of that policy, or the commissions, I should say, would only be about $8,000. So as the agent, make $8,000, opposed to the IUL agent made almost 100. Yeah. That's why IULs are pushed so much, because the agents can make a ton of money.
Yeah, I guess, show me how you're incentivized, I'll show you how you'll perform, type of thing.
Yep.
And I don't fault him at all. Like, I've used the IUL policy to lend out. I'm starting to use it more, but it took me longer to accumulate cash value.
Because of the surrender charges.
Because of the surrender charge. It was a lot. Like, I was like, dude, I have no money. Like, what the freak? And then I looked at my thing and I go, man, I won't be able to start using this thing until year 3. Whereas my whole life policy that your guys' team set up, I was like, oh, I can start using this literally next month. Like, I put in $25,000, I can start doing loans at $20,000, right? Like,
yep.
It was a way better structure than what I had in the IUL. And if I knew more, I would have probably not done an IUL at all. I would have just gone whole life. Now that I just learned that about the IUL, I didn't know that it was based on term insurance. So it is interesting, like this whole process. And I think that people have to understand, you don't have to have $25,000 a month to start. You can do this literally with like $300 or $400 a month.
Mm-hmm.
In fact, like I think about Alan Whitworth, right? Let's go back to Alan Whitworth. Like, if Alan Whitworth was working construction, right now, people in construction are making a lot of money. They just are, right? The demand of the quality workers in construction, I'm sure he's making $40 to $75 an hour. And if he's doing any specialty trade outside of framing, he probably is making, $100 an hour, $125 an hour if he's plumber, electrician, et cetera, right? Mm-hmm. He had the ability and the financial wherewithal to throw in $300, $400 into a whole life policy. He had the ability. But here's my favorite part about my policy. I treat it like a bill, which then requires me to produce more income. The funniest thing about my policy, and this is only a high-level thinker will get this, the funniest thing about my policy is I make more money on my policy than I ever could on my policy. I'm going to say that again because it's confusing. I make more money because of my policy than I ever will on my actual policy. What does that mean? It means that every month I have an ACH come out of my account that goes into that insurance account, which then goes and does the thing, and I lend money and I make a bunch of money. It's great, and I have a death benefit, which is awesome. If I killed over dead right now, my family would never have to worry about money, which is awesome. The way I make more money because of my policy is because I go out and I produce an extra $25,000 a month or more.
You see the bank account going down, so you're like, I got to get my ass to work. And the way my personality works, and maybe you're the same way, is like, I prefer to run on an empty tank. I prefer to have no money in the account, my back up against the wall. I want to be 3 points down in the fourth quarter with 12 seconds left on the clock. Otherwise, I get lazy and I get lackadaisical. And you want me to produce more, take more out of my account. So the cool thing is, here's where like an Alan Whitworth probably screwed up. If you don't have a place for your money to go, your money will find a place to go. Mm-hmm.
And so essentially what you're doing with a whole life policy is you're telling your money where you demand it to go.
First, and then use it.
Yeah, so this is a bill, comes in every single month, and then the cool thing is I can use it, right? So because of that, I probably produce an extra $50,000 a month because I have this mental requirement in my mind of like, I got to go produce $25,000 more this month than I did last month in order for me to afford this thing. And I go and produce $50,000 because I apply the pressure and I put value into the marketplace and the industry, and I figure out how to make an extra $50,000 a month. So it is interesting, like an Alan Whitworth, rest in peace. A guy I did a bunch of deals with wasn't even putting in $300, $400 a month into one of these policies. So guys out there that are listening, you got $300 a month. You've got $500 a month. You've got $1,000 a month. In fact, most of you guys listening to this podcast probably have $2,000 or $3,000 a month. Like, what are you doing? You are finding, that money is finding things and places to go. I'll give you a really good example. I'm 22 years old, going to night school, running a construction company, or not a construction company, running a manufacturing company in the day. And on the weekends, because I was putting my wife through college, had a mortgage, I was paying for my college, and I didn't have another second income, and I was paying all these bills. I go, I got to go drive pizzas at Pizza Hut and just work on tips. If I can make an extra $500 a week on tips, $2,000 a month, that pays my mortgage payment, I'm good. I don't have to watch TV. I don't have to mess around with like friends and party and stuff like that. My first time getting I accumulated $500 in cash. It was probably my first month at Pizza Hut. I'd gone through the training, paid for all my gas, my repairs in my car, and I was like, all right, cool. I've got $500 in cash. This is dope. I'm 22 years old. The second I got to that $500, our entire sewer underneath my house had to be scoped. And guess what? Roto-Rooter came out over and they go, hey, you'll never guess what the bill is. $500. And I've learned that if you don't tell your money where to go, it will find a place to go. It will tell the universe. It's basically a homing beacon. Your money sitting in a savings account or a checking account is basically a homing beacon to the world and the universe. Hey, come and steal me. Come create some bill for Pace or Devin to pay for. And so for those of you guys who are like, I don't really have that money. Yeah, you do. Look at your finances and find out where you're wasting $300 a month, or look at your emergency stuff that you had to pay for, or the football party you paid for, or your daughter's birthday who's 6 years old and you spent $1,000 on her birthday. You don't need a lot of the things you have. Go and take care of your family first and foremost by putting in $300, $400, $500 a month into a policy like this, and guarantee that you are worth more dead than you are alive.
Yeah, so if you pass away, then your family's not, caught with their pants down. And I always tell people, like, your money is going somewhere right now. It is. Everyone's is. So you figure, let's say you make $100,000 a year after taxes, you're probably keeping about 70. Would that be fair?
Yeah.
So $70,000 after taxes. Most people are on direct deposit. It's directly deposited from their employer to their bank account. So $70,000 is flowing to Chase, Wells Fargo, what have you. That's $5,800 a month. That's going to Chase, Wells Fargo, whatever. That's earning 0.06% interest on average. That money is not protected. If someone sues you, they can take that money. If you pass away, your family gets all that's in there. Let's say it's $5,800. If you simply change where the money flows, so you have it flow to a policy, you're already flowing it somewhere. It flows to a policy, and then you use it to pay your bills, to pay off things, to do whatever. You just have to give it a little time. I'm looking at one of my policies. I'm in year 4. I just funded it. It's $20,000 a year. I funded $20,000. It grew by 22. So think about in your bank account, if you put in $20,000 tomorrow and you look at your balance and it says 22. Wait a minute, I only put in 20. I can use 22. You would never stop putting money in that bank account, because this one, by year 20, I can only put in $5,300. That's the base premium. It grows by $27,000. I put in 5, it grows by 27. There's no bank account that does that. So it just takes a shift in mindset. Where's your money flowing? It's flowing somewhere. This is just a better place for it to flow because it's all protected against lawsuits and judgments. And you can use it without interrupting all the compound growth. If you use money in your bank, you're not making your 0.06% anymore. It's crazy.
Bonkers.
I love it, dude. We got off topic for sure. We were supposed to be talking about subject to and all that kind of stuff.
People can go look that up on my YouTube channel. Like, this is what people really need to do. Like, honestly, you got to take care of your fam. I just actually looked up my last text message from Alan Whitworth.
Oh, wow.
And just kind of going through this stuff. And it's just sad to think that there's people out. You just never know when people are going to pass away. You know, John Rulin passing away. Good friends of mine passed away recently, going to funerals. I had a guy named Rosalio when I was running construction for years and years. Rosalio he was my landscaper for 9 years, and he was struggling with addiction and problems and stress. And he would always tell me, he's like, my family, I want to take care of my family. I'm doing this to all take care of my family. And he made good money. I was writing him checks for probably $20,000 a month for landscaping. Of course, he had a couple of employees, but he was probably clearing $12,000 a month as a landscape owner. And I bet you he kept most of that money under the table. And Rosalio, now known him for 16 years, just shot himself 30 days ago because of how stressed out he was about like inflation, and I don't know what to do, and I've got all this stress and pressure on me, and this, that, and the other. All the fix and flippers that were using him for landscape installs were slowing down, and he was all stressed out. And his wife, basically, my wife flew down from Montana to go to the funeral. My wife goes to the funeral. She's like, how are you going to be taken care of? Do you have an insurance policy? Are you taken care of? And she's like, no, we didn't even know that was a thing. What do you mean insurance policy? Why would an insurance policy pay me money? What is that called? Like, what you don't know will hurt you. And Rosalio, all this pressure and stress, he would always talk about his family. Didn't even take the time to put $300 or $400 a month into a policy. And it would have reduced the amount of stress just going, look, I know that if I get skin cancer from being outside all day long, I have a heart attack because now I'm, 55 years old out, doing landscape stuff. My family, my kids, my wife, everybody's taken care of. Meanwhile, he's going home and drinking himself because he's so stressed out, not understanding that there's something called infinite banking or life insurance that could have taken that stress and that pressure off your back. I know my death benefit, bro, take all my real estate out, my business deals, take everything out of the world, take all my net worth, everything. If I died today and everything else went away and my partner stole everything from me, one thing I know I can rely on is my wife getting a check from the insurance company. It's the sleep safe at night, have no stress, no pressure, no anxiety type of insurance policy that I think a lot of people just don't realize. You just need a couple $100 to get started.
You know what? A lot of people don't know this. You might not even is kids policies. Do you have policies on your kids?
I have not gotten to that point yet because I haven't understood them, but I do know that you can get policies for your kids and I can borrow against them and all that kind of stuff. I've just gotten to the point where I'm actually starting to understand how to use my policy and the ins and outs. And I know it sounds stupid because it's like, Pace, it's not that hard. In 4 hours, I could teach you everything you need to know. It took me a year and a half to learn subject to and seller finance. I remember whiteboarding. The first subject to deal I did it all wrong. That was after a year and a half of learning. So I'm not a quick learner.
Same.
But once I learn it and I implement it, I take off, and I know that about myself. So on the whole life policy, when I, watching your content, learning from you, I go, all right, I'm going to bite the bullet. I'm just going to do the thing. I know it's valuable, and I'll learn by doing. And I know about the kids' policies. I think it's genius because I can borrow money against my kids' policies, which is freaking awesome.
Yeah, I would highly recommend doing it eventually. Like, the sooner the better, because yes, you can use the policy because you would be the owner. You own it. They're the insured person. And the way you want to look at it is life insurance is based off compound interest. Compound interest takes time. More time you give it, the bigger that hockey stick goes up. So with kids, they have so much longer to live than we do. Like, I started a policy on my daughter. She's 10 months old. I got it when she was 2 weeks old. 2 weeks. Most people think like life insurance is for old people. The reason I did it is because for the first 21 years of her life, I can put in $10,000. I can use it just for infinite banking, right? By the time she's my age, I'm 39. When I put in $1, it pumps out 15. And that's only at 39. I can assign it to her. She now has a banking system where she puts $1 in, it pumps out 20. A few years later, puts $1 in, it pumps out $30. So the compound interest on a kid's policy is ridiculous. Plus, you don't need their permission. Like, they're your kids. You can just get policies on them if they're minors. So I've got 3 on my daughter Haley, 1 on my daughter Brooklyn, 3 on my wife, 1 on my dad, 1 on my mom, 1 on my father-in-law. Dude, you can insure a lot of people and just use the insurance as a way to leverage money in a policy.
If I could see, those policies sound like, for me, if my primary objective is to lend the money out, I look at all those policies, they're like, I don't have time to manage that, and I'd have to hire an employee to do that because I'm just not going to do it. But if there's a way for me to go to a bank and go, hey, here's all my policies, here's all the value, give me 1 line of credit against those policies, that would make sense for me to go get multiple policies and have multiple things going on.
That's why I do it.
As of right now, I'm like, I have one whole life, 1 IUL. I'm using them effectively and it's working. And I have a lady named Jade that works on my team that manages all of it. So I've never requested money. I've never dealt with the thing. I've never gone on the portal. I just don't have the time for that. So people are like, oh, you can get policies on your kids, you're this, you're that. I'm like, okay, who's going to manage that? But if I get a line of credit, dude, I'll go buy 10 policies.
Yeah, it's the one that we use is Coastal States Bank. So they'll let you bunch together all of the major carriers. So you can take all your policies. I've got 15 of them. So can you imagine managing 15 policies? I managed all of them until I got to 7. And I was like, this is freaking insane. I'm taking a loan from this policy, repaying that loan, taking a loan from this policy, repaying that loan. Oh, I got another loan from that policy. I'll repay that one too. Dude, it got crazy. So I just bunched them all together, got 1 line of credit. Now I can just write checks and I'm just paying back 1 line of credit.
So smart.
So dude, I'll text you that just so you don't forget. Coastal State Bank.
Yeah, that's great. Now, here's a question. Why would I just get another policy on myself instead of getting a policy on my kids? Is it because I can pass the policy on and I'm dead, but the policy continues on?
Yeah, you can pass the policy on to them. And then you want to look at it as, like I said this before, everyone's guaranteed to die. You never know when. So obviously, God forbid your kids pass before you, right? Like, no parent should put their kid in the ground, ever. But you never know. Something could happen and they could get a terminal illness and become uninsurable. So if you insure them with as much life insurance as you can while they're young and healthy, now that you've got an ever-growing asset that you can borrow against, they're eventually going to pass away someday. What I do is I have all my policies into a trust, and the trust has a succession plan that states that when that death benefit comes in tax-free to the trust, it has to purchase more policies that are built the way these are built. So think about it. If $30 million just came to my family tomorrow, my wife probably doesn't know how to grow that and multiply it.
Yeah, which means people are going to come after her to try and manipulate her and go, hey, invest in this, trust me. You know, if you got money, wolves are coming for it.
Right. But if 30 million comes in and it automatically buys more policies, think about this. The money comes in tax-free. If it goes into policies, those grow tax-free. She has to do nothing. It's going to grow. She can use the cash value to go make more, but she doesn't have to.
Yeah.
So the money comes in there. She could use the cash value just to pay bills or whatever, and it's still growing, tax-free. And then when the next heirs die, it's going to happen. Everyone's going to die. Same thing happens. The money goes to the trust. The succession plan dictates that it has to buy policies like these ones. So basically, my family just gets wealthier and wealthier and wealthier and wealthier every generation, tax-free. And then we can use all the money tax-free because you're taking loans. Loans aren't taxed. So that's why I think it makes sense, dude, to have policies on kids.
If I can get set up with that bank, I would buy policies for my kids for sure. The administrative side is just the nightmare, I think.
100%. Yeah, I'll text.
Guys, by the way, if you think this turned into an advertisement for you to go and buy a policy through Devin Burr, it did. Go sign up. Go put on. What's the smallest amount of money one of your clients has bought a policy with you for?
Age times 10 per month. So if they're 20, it'd be $200 a month. 30, $300 a month.
That's it.
Yeah.
That's it.
That's not a lot. Like the more you put in, the better, because you've got more to use. If you put in a little bit, you're protecting your family and you're slowly growing up a cash value. It's going to take a while because you're not putting as much in, but I think everyone should do it, man. Everyone is guaranteed to die. So you should have insurance on your life. Think about, you have insurance on your car. You're not guaranteed to get in an accident. You got insurance on your house. You're not guaranteed to burn it down. You got insurance on your phone. You're not guaranteed to drop it. You are guaranteed to pass away. So you should definitely insure that. And if you can insure it and then use the money as a living benefit, dude, there's nothing better. There's no better foundational asset.
Possibilities are infinite.
Ooh, I see what you did there. Well, dude, we've been rapping for an hour and 18 minutes. Fastest hour and 18 minutes of my life. It's been fun, dude.
I appreciate you, brother. I'm gonna reach out to Alan Whitworth. Do you know his girlfriend? His fiance?
I don't. I never met her. I met his ex-wife, but I never met the fiance.
I'd love to, help out with the kids. Maybe send a little bit of money. I made that house I did on Chesterfield with him. I probably have made $250,000. He made 10. I made $250,000 because of the appreciation since we bought it. I should do something. Send some money their way or whatever. But
I'll shoot you the GoFundMe.
Okay.
Because I've got the link for that, and then I'll send you over the name of that bank. One thing I thought of at the very beginning of the pod, I wanted to mention to you. You might not remember this. When I got into real estate, I mentioned that I met you first at a meetup at Batch's office.
Yeah.
I think met you one time there, maybe two meetups. And then the first mastermind I went to is the one you were talking about, the Go Giver mastermind. We were sitting right next to each other. So it was like a table that went around. Brian Applis was there. Simmons was there. There were some other people there. I came with Templeton Walker.
Yeah.
Right?
Yeah.
I'm sitting with Temp, and they're going around talking about what they're doing in real estate. I hadn't done a thing. I hadn't done one deal, not even a wholesale deal. Temp had to leave early to get his kid. So he's like, I got to leave early. So he talks early, and they're going around. I'm like, holy shit. It's getting closer and closer to me. And dude, I was so freaking nervous. Like I couldn't hardly breathe. Like my heart's pounding. It gets to me and I'm like, hey guys, I'm Devin. You probably don't know me because I haven't done anything yet. Just happy to be here. And I shut up and you're like, bro, I know you.
That was a good room to be in.
It was a great room, dude. I tell everyone all the time, if you want to really level up, you got to get around people that are higher than you at a different level than you. So many times we're comfortable staying in rooms where we're the most knowledgeable and we make the most money, but that's hindering you. So me getting outside my comfort zone, in that room, I was so uncomfortable. Steve Trang's there, other people, who else? Brent Daniels was there. And now all these people I'm cool with, and I learn from them. And because of them, I've been able to make a good amount of money, have a decent amount of net worth, get into infinite banking and provide for my family. So I urge people to get out of your comfort zone, get around people that are doing bigger things than you. It'll inevitably just kind of push you up because you'll learn what they learn. You'll think the way they think, and you'll start doing things the way they do things. They're at where they're at because they do things in a certain way. So I'll leave it with that. And if you want to leave any bits of wisdom, that'd be awesome.
I just think that there's people that listen to that and they think it's, cliche, get in bigger rooms, get around people thinking bigger than you. But I can tell you, you'll never make $1 in your life without another human involved in that transaction. You'll never. There's not a time you'll make $1 without somebody else involved in that transaction. Never. It's never happened. Nobody's stumped me on this. And so if the equation requires people for you to make money, then the higher quality the person, the more quantity you'll make. And so it has been literally the secret to my success is getting around people that are much bigger than me, providing value to them in whatever way I possibly can, giving them advice on a real estate deal or providing resources or a relationship, or maybe even putting money into a deal of theirs. Like, AJ Osborne, a guy I wanted to be friends with for a long time. I go, you know what? I'll just write him a check for $100,000 to be in as an LP, an investor in his deal, and I'll build a relationship with him. And by far that $100,000, yeah, sure, I'll get double my return back in 5 years. But I made way more money by being his friend than I ever did in investing in a real estate deal. So do whatever you can. Invest in deals with people, participate in their business with them, get in masterminds with people, do whatever you possibly can. Your parents can only get you so far, my friends. And YouTube can only get you so far. Podcasts can only get you so far. You got to get around physical people, feel the molecules vibrating in front of you. Your molecules need to be able to feel the vibration of their molecules within 5 feet. Otherwise, the change doesn't happen. So physical presence is super important.
100%. Well, dude, pleasure having you. That was a lot of fun. I learned about infinite banking a ton, and
I pulled out my notepad, bro. It was gangster.
If you learn some stuff, I feel accomplished. So I appreciate you having you on, man, and appreciate you coming. Everyone, if you got value from this, please make sure to share it. That's how we grow with the podcast. I'm definitely trying to grow the YouTube right now. So if you're on YouTube, if you're not subscribed, please do so. Hit the bell so you get notified. Until next time, I love you guys. Peace.